And good afternoon, everybody. This is Michael Filighera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott Wave update for the S&P 500 for Tuesday, August 3rd, 2021. Well, as you can see, to start, I have reverted back to the preferred count that I'm using for the S&P. And so I relabeled everything, and including up into what we accomplished today. One change that I did make is I did not, I left the minute 3 here, but I had also, was wondering where, I had left the minor 3 completion point here. There's a 3, a 4, and a 5, minor 3. And I just extended that out and put the 5 with the minor 3 here. It definitely fits better. It definitely is. It is more acceptable to me in terms of the count, in terms of where we are, in terms of what just has all taken place, because this is a very now a very clean ABC down and fits our structure much better. And so I am very happy to have presented the alternate count or the alternate view that I did yesterday, because it certainly, as we started out this morning, I thought, okay, here we go. And I really believe that we could have dropped a lot further when the market stopped and turned. I took a step back, went back to my hourly chart and realized, wow, how clean that was and how beautiful. And then just jumped on board for this initial rally out of that correction as we start the minor wave 5 advance. And again, I'm just going to include right here, I do expect minor wave 5 to subdivide similarly as minor 3 did. Maybe not as extensive, but I do suspect, or I do expect, to be able to count 5 waves within minor 5. So this is likely just the first. So now I'm going to start to re-add some of the Fibonacci extensions, which are going to help us put a cleaner scenario or parameters around what we can expect. Like 67.25. Let's get up to that. And it's not quite right. All right, let me just go and change it real quick because I want to make sure that I've got these right. That low is 65.25. Just change that. Put that in, and then boom. Now we've got a nice clean chart. So where we're looking for now, well, you can see it's already surpassed 0.236, but that fully to be expected. And I really expect it to surpass 382 as well. And that's at 44.30. So that would put in a new high above the top of wave 3, which is now at 44.2250. And where our first level that I think can come in that maybe could put a completion point on the whole deal would be the 0.618. That is where minor wave 5 would be equal to 0.618 times the distance of minor 3. And that comes in at 44.70, 44.71. So basically, all of these then become resistance and possible candidates for the completion of minor 5. And then in turn, the intermediate 5, the primary 5, the cycle, degree, and on up. So, but what we really need to keep an eye on is that wave 1 is the shortest, wave 3 right now is the longest, wave 5 can be longer than wave 3. And because wave 3 would not be the shortest wave, and that is the rule. And that's coming in my next chapter and the next lectures of You Are Your Own Guru. But here, minor wave 5 would be equal to the distance, equal to the length of minor wave 3 at 45.36. Now, here is where, oh, actually, it's even higher. If we go on the basis of intermediate 3 to intermediate 5, we're talking up there. We're talking 4,967. Now, is that possible? Of course, all things are possible when we're looking at these markets these days, but it's not going to be high on my list of expectations. I suspect that we'll start to run out of gas because you can see the market starts to get up close to those highs and they don't want it to go. They will not take it any higher. It got up to 17 today. What stopped them from just popping above 22, which was over here? It doesn't happen. They didn't even want to get above wave B. Not going to happen. That was at 19. Will it happen later? I don't know. I would suspect so if it's going to continue, but we're just doing a little pullback here. So I think that more than likely what's going to start to happen, we'll start to top out once we get above 4,500. That's kind of my thought process right now. But again, it's all going to depend because structure will outweigh price. So if the structure is complete, in other words, I can count 5 waves up cleanly, then we'll be looking for the tops. I mean, that's including extensions, it's including everything that we could possibly do. But right now we have some additional points other than just these relationships of the intermediate wave 5 to intermediate wave 3. Those start here, and maybe that's all we get. Although there are some calls for 4,600 now, and we've got it. We've got them covered. We show those same levels that it can get above 4,600 and then some. I mean, 1.382 of this minor wave 5 in relationship to minor wave 3 comes in at 4,601. And then the 1.618 at 4,642. So yes, this minor 5 can get up there and then also complete that intermediate 5 at the same time. So yeah, there is a lot of potential for much higher prices. And I'm going to be paying close attention because the market starts to get uncomfortable going to new highs. So we don't really have a whole lot of other things to put out there to say, well, this is going to help propel the market. So it's just going to be straight bullishness. It's going to be what people are going to start to believe now that all the numbers are out. But what we still have, one caveat that could come on Friday, and that would be the unemployment number. If the unemployment number comes out and the market loves it and the market accepts it and feels that it's going to continue to hold interest rates down, then we'll all have to deal with inflation as individuals because inflation is real at the moment. But we wouldn't anticipate then that the Fed is going to start adjusting interest rates. Now, if we see a big drop in the employment numbers and that more people are becoming unemployed, then that's going to put pressure on the Fed because it's going to put a pressure on inflation. And that's the Fed's number one priority. It really is to control the money supply so that we can keep a grip and a control on inflation. Runaway inflation is not healthy, and it's not a good thing for any of us, to be honest with you. So, but back at the ranch, we have some nice possibilities. And this, I loved this rally. Once it got going, it was beautiful, and you just really got on board and just made a ton of money. And so it was great. It was great. The moving averages helped all the way along and kept it all in line. So for tomorrow, I think we're back to pullbacks being a little bit on the shallow side. And again, let me just go down to the 15-minute. And so I can open this up because what I want to look at is this. So if we have 1, 2, 3, 4, 1, 2, 3, 4, 5, could be 5. So we could be just pulling back in a small wave 2. Now, one thing that you can do, just if indeed this is going to hold, so in other words, that's not going to change and that high's in place, then you run Fibonacci retracements from the bottom to that top, if indeed this is the top. So in other words, if it continues to move higher, then you just change that level. As you can see, even a minimal pullback should bring us back to 4,400, or 5 down to 400. But hold likely the 20. You can see how they start to come into play. If it comes down to the 382, it's coming down to the 50 and the 200. It's a wave two, definitely in the books. In fact, they can come all the way down to 618 and still be involved in a 5-wave advance up. So we can get some disappointments in the market where they really start to rip into this advance. The only thing it cannot do, it can't break 43.65. That's what it cannot do, because then it's no longer a wave two. Wave two cannot correct more than wave two put in. So it cannot dip below the starting point of wave one. Then it's no longer a corrective wave, is it? So we'll deal with that should it happen. It'll make itself clear as to what's going on. In any case, I think that I can pretty much, even on my 15-minute chart, can count 1, 2, 3, 4, 1, 2. I'm gonna have to go a little bit higher. You might have still a little bit more to the upside. Got a little bit of like too much down up here. And so maybe there's still a little bit of extensions to come. And if that's the case, up and away we go. But we know we have some resistance just above all of that at 30. So maybe it wants to run up another 20, 30, $13 and get us up to 44.34, 44.31. And that then would then produce a second wave. So for tomorrow, I'm looking, it's a Wednesday. We don't really have much in the way of news. I think there might be a couple of insignificant figures coming out tomorrow. I'm not positive, and my memory's not that good right now. But once we get a top in here and we can finish this first wave of minor wave 5, then look for a minute wave 2 correction. Initially, I'm looking for here. I'm looking for the moving averages to put some control on how far this thing wants to go. Again, a wave 2 could drift all the way back, just cannot exceed the starting point. Upside, we have 44.30 and then above, if the market decides it wants to continue to go higher from here. And again, remember, once we start getting into that all new territory, about 44.22, we don't have any chart points up there. So things can get thin in terms of, we get some buyers and they're going to push, push, and push. It can get real thin up there. We have no idea. It's like, well, where should we find resistance? The only way what we have is our Fibonacci extensions. And so we don't have chart points that we can point to. In any case, have a good trading day tomorrow. And the next update will be Wednesday, August 4th.